Okay, good evening, everyone. This is Demetrius with Akeelah Traders. And so today is June 30th, 2024. It is 9 p.m. Eastern Standard Time. And I'm going to go through on this particular video I'm making because I want to take a look at the GBPUSD pair. And we're going to take a look at our Akeelah our Akeelah Royal Strategy. And so this strategy is one of the ones we created to primarily look at support and resistance zones. So we're specifically looking for support and resistance, supply and demand zones. Our Akeelah system, we designed this Akeelah zones to be able to go in and visually take a look at these. I'm looking right now at GBPUSD on the 4-hour time frame. And so as I look at that, I'm able to go in, turn these zones on and off, and it's pretty much just going to show me high probability support zones, high probability resistance zones. It has the ability to do that, regardless of the time frame. So we're going to run this strategy on the 4-hour time frame. The time period I'm going to use is going to be from June 1st to June 30th. So that'll be pretty much the whole month of June. Inside of my settings, the recommended settings I would use for this pair, this is let's see, GBPUSD. It's okay. It's one of these pairs that on the currency pairs like this pegged to the US dollar, we would run these particular settings on this one. And so this is aggressive settings. The majority of our Akeelah strategies are designed to be aggressive, to run on aggressively moving pairs. So in my settings, the most important things that I'm going to have here is I'm running with a daily loss limit of 15%. The system is designed to risk percentage. These are going to be my default settings. My risk percentage is going to be 5%, but it's also a variable of the ATR a little bit. So that's a little bit challenging to understand. It's just the way we coded it. But the primary thing is going to be our 15% is going to be my daily loss. Now, because this strategy is designed to be aggressive, to take multiple trades, we're going to look for a floating profit of 5%. So anytime our system gets to 5% in profit, it's going to automatically take that profit and close out that trade, regardless of whether it's in one entry, two entries, or whatever. And so that's our aggressive setting for this. For this simulation, I'm going to use a $5,000 account, and we will run this for the month of June. Some of the other settings that we have in here, these are particular things designed within this strategy. They're variable settings, but the last one that I want to point out that is part of my recommended settings is the number of candles to look for, and I'm going to set that to 5. So pretty much the decision making that we're going to use is going to be if we approach a zone that's identified by our system as a support or resistance zone, we're going to wait and make sure that zone has been verified for at least 5 candles. It's holding for at least 5 candles. So we're not going to be making immediate reactions as soon as zone is created. We're going to get some verifications on that, okay? All right, so let's start this. I will start and run this, and I'm just going to capture the bulk of this. I may speed through this simulation a little bit. Let me just turn on my zones here so we can kind of see. All right, so we're running this 4-hour strategy. I'm running it around the clock. We could hone this in a little bit more by tightening in on more US running hours, but I think for the GBP pairs, it's appropriate to run it around the clock. So right in here, we started off. You see, first thing we did, we approached this zone, which was an already existing zone. It's a fairly thin zone, but it's a zone nonetheless. So based on our criteria, our system is telling us to take a sell on this. And we entered one position at that 4-hour time frame. The next 4-hour candle opened. Our criteria was still met to take that sell, so it took another sell. Let this play and see what happens. Okay, and looks like we closed out. We lost that trade, and so this is pretty good to see. And if you look at the amount that we lost, so we started with $5,000. We ended up at $4,307. So we lost right at $700. $700 is approximately 15% of our balance. Again, that's an aggressive strategy that we're using. You can adjust these risk percentages if you're a subscriber. If you're have a license to our system, you can adjust the settings on your own. These are the settings I recommend using. So if your risk tolerances are not that big, then just adjust it. So we lost 700 on there. Our system should tell me here in the journal that trading stopped. I hit my max daily drawdown. My max daily drawdown limit has been reached. And this would be, is this within the first day? Looks like we started trading on, let me just go to my results here. Yeah, so we started trading, looked like the first trading day was June 3rd. So the first day of June 3rd, we took a loss that particular day. Let's keep going. And so our approach here at Akeelah is you have to be willing to match your risk with your expected reward. If you want to be aggressive, if you want aggressive rewards, then you're going to have to take aggressive risk. If you want to be more conservative, then fine, do the same. Do that. So now we're into the next day, so we should be looking for trades again. We have another zone that's been created here. We'll see as we approach that zone, we took a sell. And we closed that trade out in, did we close it out in profit? Looks like, yes. So what did we have? We had 43. So we closed that one out in profit. Let me get these things out of the way up here. So that's the June 3rd one. Let's go down here. Okay, here we closed this one out. Looks like with $200 and something in profit. So that was 5%. Yeah, that should be right. That's about 5%. So we closed that one out because we had our 5% profit goal. Let's continue running. And I'm going to speed this up because I don't want this video to be long. I really just want to show a summary of what's going on. So I don't want to be too fast. So we took another couple of sales here. Sales, closed out in profit. Took another sale, closed out in profit. Maybe let me zoom in a little bit. Come here. Okay, so you can see all this time we are responding to this sell zone here. As we approach this zone and get within the range that we've coded the system to look for, it's looking at the price action within this zone. How is the price reacting when it approaches this zone? That's what it's doing to make those decisions. So we took a sell, made a small move down in our favor, took those 5% profits. Did the same here, took the 5% profits. Now we're in another sell. Let's see. We are still in a little bit of drawdown. Looks like our criteria was still met. I'm gonna slow it down just ever so slightly. Looks like our criteria was still met. So we're in 1 open trade, 2 open trades, 3 open trades. So the advantage here is our loss limit is still the 15% daily. Our profit goal, floating profit, is still the 5%. So how likely is it for us to get a 5% profit with 1 open position? You know, the market's got to move in our favor X amount of pips. If we open 2 positions, now the expected movement or the necessary movement has been cut in half. 3 positions, it's even smaller. So now that these 3 positions are open, we're still looking for the same 5% profit. So let's see if we win this trade and if this zone holds. That's most important. That zone did hold. We made this move down. We got back into profit. And so we're almost back to break even. We took a pretty significant loss initially, but that's fine. I guess what's most important to us is in the longer run, how does this play out? We can't look at just, you lost a trade initially, the strategy is not working. Let's continue. This zone is still in place. So we will still take trades off of this zone as long as it holds. Take another trade, sell. Let's see. The market's kind of consolidating right now. Okay, profit. Sell again, profit. And now one could say, the market came off of this and we're steadily going down. Why are we not riding this sell? That's not our strategy. That's not what we're looking for. We're looking to get our profits, get out of the market. So now we've created a demand zone here. If this demand zone holds, we're going to buy off of this zone. Right now it's in verification stage. It's there, but we're not sure if that's a zone that's going to be sustained. Okay, at this point, our system says, hey, I've got enough verification. I believe this zone to be sustained. I'm going to buy off of this zone. I'm looking for my 5%. 5% here of $5,500 is going to be roughly $270, something like that. Profit. If we come back to the zone again, we will buy again. Okay, now we went up into this sell zone, and looks like we blew through that one, but there's another zone that's up above that one. Let me zoom out a little bit. Okay, so we had a sell zone here, a temporary one that we sold off of in this area and made some profits on this one. In this case, the market pushed up through that zone, broke through it, but our system is still holding this sell, saying I still expect the market to hold. We have another resistance zone up here. We're going to trade off of that zone. So we are still floating negative right now. We created another small zone below this one, so that's a little more validation that this big zone is holding. It says not only is the resistance there, I see more resistance here, so we should win this trade. Let's see. Sell. Market slowed down a little bit. Okay, profit. We profited on that trade. Now we're kind of in between these zones. As long as we're in between this area, we're not going to trade, buy or sell. We're waiting for this zone to be either tested again and confirm that it is support, or back up here to confirm this resistance. Okay, we're buying off of this support, and looks like we lost that trade. Is that right? Yes, look like we lost that trade. Okay, so we lost off of that. So that support is not holding. Okay, we created another support zone. Right now we're around mid-June. So mid-June looks like, what happened here? Okay, we're back to pretty close to break even. Back to where we started from. So that's not good overall, but again, we're looking for, you know, more longer term results off of here. Okay, we're buying again, buy, profit. Okay, we're around the 19th of June. So as of right now, we're up only $500. We're only up 10% on this account. Or I should say 10%, not only 10%. I mean, 10% is pretty significant profit on a trading account, seeing as how it's running automatically. We're buying again off of the zone, profit. Buy again, profit. So we just closed 2 quick trades there. That zone did not hold, but that's the importance of our strategy in here. We're buying off of what is at the time proven support, and we're quickly taking our profits because we're not sure at this point whether the market is going to continue to push up and give us a long move, or if it's going to come back and retrace. And so our mindset is take your profits. So take profits quickly and take them often is our mindset with this strategy. So now we're up over $6,000. We're up $6,000 balance. We're up about 20%. And we're approaching the end of June now. So we may or may not take any more trades. Okay, we took a buy again, profit. Bought again. Let's see if we're going to get in profit, if that's going to hold, or if we're going to lose this trade. We bought right here. Profit zone should be pretty tight. Created another support zone. That's very likely that we're going to win that trade. Profit. Take my money and close out. Get out of the market. Buy again. Buy again. Buy a third time. Profit. Buy again. Profit. And now we're pretty much at the end of the month. That might have been our last. Okay, that was our last trade. All right. So looks like, let's look at the results that we ended up with over here. We go to our report. And so this is GBPUSD, again, on the 4-hour time frame is what we're looking at. And so we started with a $5,000 account. Total net profit, we made roughly $2,500. So that's about 50%. We made almost 50% profit if we had run this strategy with these settings for the month of June. Our absolute drawdown is $850. So you have to be willing to take that kind of a drawdown. That means our balance got down to a little over $4,100. Our overall profit percentage, we won 86% of those trades. You can see the average profit trade, average loss trade here. So average loss trade, that the average is a little bit higher. And so this is kind of counterintuitive to most people, but this is one of the big benefits of our strategy. Sometimes we're not afraid to have, when we take losses, for those losses to average out a little bit higher, because the amount of times that we're losing is so much less. We're winning 86% of the trades. We had consecutive wins. We had 38 consecutive wins. We only had 6 consecutive losses. So we're willing to take that balance there. So you can see overall, those are the results there. The number that we really like to take a look at is the expected payoff. That is $28. So with this strategy, it says if you had run this strategy with a $5,000 account, your expected payoff would be roughly almost $30, $28 per trade. So those are the results of this one. This is again Akeelah. It's one of our pro strategies. It's Akeelah Royal Strategy, which is our version of the support and resistance, supply and demand, but it's got a lot of other factors that we're looking at. We're constantly reading the market over this time period. Okay, so hopefully you guys enjoyed this video. Please leave any comments, like or subscribe, and let us know what your thoughts are. Okay, thank you.